Let's go to Spotify CEO Daniel Ek. What a great joy to have him on. Joins us post earnings. Daniel, it is great to have you on, and you've got a story about the way people consume Spotify that I think surprised people. I think there were people who said, you know what, this is a commuting story. It looks like it's more of an at-home story. Tell us about the new narrative, Spotify.
Well, it's not so much as a new narrative as something we've been investing in for the past 5 years. It's something part of our ubiquity strategy. So we have over 300 device partnerships in home, in car, in mobile, with the likes of Sonos, PlayStation, Xbox, smart speakers, but also, of course, cars as well. So what's happening now as people are staying home, listening is shifted to in-home instead of just being on mobile or in car. And we're very, very pleased with the progress, 130 million subs and 286 million monthly active users.
I think some people would be concerned that advertising was down, but when I look at the mosaic of your earnings now, advertising is really not a factor. And what we should be looking at, I believe, is growth in subscriptions.
Yeah, you're right, Jim. Advertising is about 10% of our business, so it's a very small part of our overall business, and we're very much a subscription business, and that's the primary driver, I think, of our business, certainly in the near to midterm.
When you were with us last, you were introducing the concept of podcast. I think a lot of people were skeptical. They weren't sure about the acquisitions. I remember it was over in Brooklyn. Podcast looks like it's exceedingly profitable and well ahead of what we thought could happen.
Yeah, it's been a great story. A year ago when I was on this show last time, I introduced the shift in our strategy from music to audio. At that time, we were a very small player in audio, but growing fast. Now we're the number one player in more than 20 markets around the world, and quickly catching up in the markets where we're not number one. And of course, we have our content, which has grown as well from about 250,000 podcasters now to over 1 million this quarter. And, I'm just waiting for when you're going to join us, Jim, as well, as a podcaster.
Maybe soon.
And me too, I'm sure, Daniel. It's David Faber. I know you meant me as well. Of course. Thank you.
We'd be happy to have both of you as podcasters, maybe competing podcasters even.
No, we're always a team. Daniel, I did want to ask about gross margins, because you got a number of questions on the call about that. In terms of the gross margin improvement, whether it's sustainable, how podcasts are playing into that in terms of money you've paid, but perhaps expenses that aren't yet realized. Can you explain and tell our viewers what your thoughts are in terms of gross margins, whether we can draw a lot from the current quarter?
Yeah, again, we are at the upper end of our forecast range in terms of gross margin, saw lower cost in distribution, saw healthier growth in streaming on the subscription side as well. That's a story that we think will play out very nicely over the coming quarters as well. So don't see much of a reason other than reiterating our guidance on gross margin.
How are you approaching global expansion? I know you may have delayed your Russia for a bit. There are a number of other countries you're planning on rolling out. Has that been delayed as a result, of course, of the virus around the globe?
Well, we're always taking decisions quarter by quarter as realities changes around the world. The strategy that we're taking as it relates to new market launches is we rather want to make it right. So to the extent that, for us, it's not just about turning on a switch. We want to be locally relevant. We want to have editors in place. We want to make sure we have a great progress of new music coming onto the platform that people can come and check out, and of course new podcasts as well. So we're always changing quarter by quarter the mix of what we're doing, but again, I would just come back to the user growth and the increasing user growth that we're seeing. So we're feeling pretty good about it. Compared to Q1 2019, we have actually increased our growth rates in all 4 of our territories. So we're very pleased about that, and we'll keep on making those adjustments.
And to those investors of yours who would say, listen, we love your torrid growth, but we'd like to see you kind of put the brakes on a little bit, perhaps pursue more efficiency, cut costs, similar in the way that they're seeing Google at least give some voice to that. What do you say to those people?
Well, if you're just up leveling, it's the trend that we're seeing is linear radio is moving into on demand. We're talking about something that has billions of consumers around the world that are now moving their behaviors online. Something like the COVID will likely accelerate that trend. So for us, we're really just in the growth stage of trying to capture that growth. And eventually we will, of course, get to a more point of maturity where we'll focus more on profit over growth. But for the next few years, it's going to be predominantly growth for us.
Hey, Daniel, you talk about listening in cars. We talk so much about the work from home dynamic enduring well past the healthcare crisis. What is listening in a car going to seem like or be like for most commuting time in general? Do you see it recovering to pre-COVID levels?
I mean, it's hard, obviously, speculating in when things will go back to normal or even what normal will be. What we've seen is a massive shift in user consumption. We've seen, obviously, no sports. We've seen a huge focus on news. We've seen focus on health and wellness to a large extent. And on the music side, there's been more focus on classical music. There's been more focus on chill music as well in terms of just everything here under the corona. I think going forward, I very much believe that people will come back and wanting to get back to a normalcy. So when sports will come back, I suspect that we'll see record numbers of people attending those. I know I'm one who's certainly craving more sports. So I believe people will come back to more of a normalcy as well.
And then in terms of advertising, you're not heavily exposed to the ad market in general, but in terms of categories, I wonder which you think will be most resilient as we work our way through the summer.
In terms of advertising, I mean, again, we're seeing on our podcasting side, again, it being pretty resilient. I think people will move towards a better ROI and better measurability. So digital will still be strong. And I think the real key theme for investors to look at is really the trend lines that we've been seeing, I believe, will be accelerated. So physical to digital and linear to on demand are the big trend lines that will be accelerated, and more measurability, of course, on the ad side will also be the trend line that will be accelerating.
You know, Daniel, there is obviously a tremendous number of job loss worldwide, and I have to think that in terms of competition, you have a good model because 60% of your users start free versus everyone else, where they insist that you pay from the get-go.
Yeah, you're right, Jim. We have a freemium model. So you start out being free on our platform, and eventually people move into becoming paid users, more than 60% of them, just like you mentioned. And this is a great thing in an uncertain economic environment like this one, because you can easily just, if you're feeling economic pain, you can go back down to the free service and then go back up to the premium service when you have the means to do so. And we think that's going to be a very strong competitive driver in an uncertain environment.
A lot of people don't realize it, but I'm a chill guy. I heard what you said about people listening to chill music, but it is true. There is a mindfulness wave that is somehow being captured by the people who work at home. Are you able to detect that from artificial intelligence? Because that's not exactly what I thought would happen during this period.
Yeah, you're very much right, Jim. Our personalization is discovering changes in consumer behavior almost overnight. And we are seeing a lot of people turning into wellness and health, want to de-stress, want to focus on health. Those are strong drivers, both in podcasts and certainly when it comes to podcast creators, those that are doing the best are the ones that are tuning into those trends, either on news or focusing on wellness and health. And similarly on music, that's also been a big driver of our engagement these past few weeks.
Yeah, speaking of engagement then, Daniel, you mentioned Jim obviously talked about free. What are you seeing in terms of free trials right now?
Overall, healthy growth across the board. MAU growth looking very nicely. Lapsed users, I previously users that have left us are now coming back. We're very encouraged by this. We're also seeing, of course, strong subscriber growth by hitting 130 million subscribers in the quarter. So far, so good.
You've talked in the past about India being a big opportunity. I haven't necessarily seen anything mentioned recently. Is that still the case, or are you pulling back there in any way?
Definitely not pulling back. India is still a massive long-term opportunity. It's more like a decade-long opportunity. We're talking about a population of over 1 billion people of varying economic demographics. But obviously, that growth will happen in India, and more people will have more economic means. And as part of that, the overall market will grow and the overall opportunity will grow. We're there. We just, in the quarter, signed a bunch of new licensing deals, including Warner Music, that brings their repertoire to India, and local music providers like Sarigama and others as well. So we're seeing more catalog, more content on the service, which will translate to more engagement. So we're pretty happy about India.
Daniel, how about kids? It seems like you're making a major effort there and it might be working.
Yeah, Spotify, again, we started very much as a millennial brand, and millennials used to be people in the 20s, but more and more millennials are also growing into their 30s and having children by them as well, and we're seeing those kids are now asking for content, and their parents are asking for safe ways to access Spotify. So we launched a kids product. We've expanded the number of territories that kids product is in, and it's just fascinating to see how kids are engaging with Spotify, choosing their avatars. It's obviously an ad-free environment. It's a very safe, curated environment, and we're seeing lots and lots of fun explorations by kids, both on storytelling, but also, of course, in music. You can imagine Trolls being a big soundtrack for us right now.
I know we're always worried that you're running out of expansion. We talked about Russia, but South Korea could be good for you.
Absolutely. South Korea is a massive music market. Obviously, you have BTS and K-pop being a big global phenomenon. So we're very excited to launch there as well. That's a big opportunity for us. But we shouldn't forget about Africa either. Africa is the continent for the next decade for sure. That's going to be a big opportunity as well when you think about long-term opportunities for Spotify. This is really billions of user opportunity that we're going after, and we're only in the beginning of that growth.